Bull versus bear. Stock battle.
Now we're gonna do our debate, correct? Aaron, you ready to be a judge?
Sure, I'm just gonna set my timer up here.
Set up the timer?
I'm ready to win.
So let me check my...
That's not how you're talking before the show.
That's not true.
So we're gonna. Vecima is in the crosshairs. Do you have a summary on Vecima, either Brennan or Brett? Just what the company does, or?
I do. I can read.
You
it
do?
here.
Okay, perfect. Go for it.
Yeah. So Vecima Networks, VCM on the TSX.
He's already ending it for you.
I think they trade around $17.75. And so essentially, Vecima provides technology solutions that empower network service providers and content providers to connect people and enterprises to information and entertainment worldwide. It offers products for the cable and broadcast industries, which provides video and broadband access to service providers, content creators, and broadcasters. The company operates through three segments: its video and broadband solutions, content delivery and storage, and telematics.
Okay, thanks for the summary. Are you ready to?
Shall I?
Are we? We know who's going first. Pardon?
You can go first if you want. I'll go first.
I'll go first. Job. You know, going first is maybe hurting my record here, just with the recency effect. I don't know. We'll see.
Aren't we supposed to be flipping to see who goes first?
Sure, do it.
Well, I don't have a coin, so
it's okay. Just let me go first.
The judge is prepared. He's really
okay.
Prepared.
So you're gonna go first, the brave man, Brennan.
I am.
Okay, you ready?
I am.
Go.
Vecima's financial momentum appears to be positive, with revenue up 60% year over year, but the company's historical growth has been a bit spotty, with a CAGR of just 5% from 2015 to 2021. And earnings have also jumped in and out of profitability, where over the last 12 quarters, the company had a median net income margin of just 2.5%. With these slim margins, the company trades at pricey multiples of over 60 times earnings and 16.5 times adjusted EBITDA. We used to love the company's cash-rich balance sheet, where from 2015 to 2020, it held over $2 in net cash per share. But this beautiful net cash position recently slipped into a net debt position of 26 cents per share. Plus, its payout ratio for the first 9 months of the year is 73%, which is up from around 40% in 2017 and 2018 when we had a buy rating on the stock. Vecima is a quality business, but with its high valuations and spotty profitability, I think the stock remains a hold and is not growth at a reasonable price. Boom.
Okay, 4 seconds left.
Whoa. Anything else to add? You're done.
Okay. Hey, that was right to the point, right to the jugular. Okay, let's see what Brett can do. Are you ready, Brett?
I am ready.
Go.
Vecima has strong revenue growth of 60% year over year and strong net income growth of 36%. Even stronger adjusted EBITDA growth of 314%, and that does not have much share compensation. This is on the back of its Entra family of products, whose sales grew by 142% due to the rising switch to distributed access architecture or DAA across the globe. As well, the balance sheet is strong with $55 million in working capital and only $4.5 million in net debt, while being able to maintain a consistent dividend since 2014. Vecima technology enables upload speeds up to 6.2 gigabytes per second, which I'm sure Brennan would love, as it takes 2 hours to upload after the recording. Both the US and Canadian governments have financially supported the industry with $20.4 billion and $2.75 billion in funding to support expansion of internet access, which requires products Vecima makes to succeed. You may say competitors will be able to compete, but Vecima has a backlog of research to support its products with $350 million in R&D in the past 7 years. The great products have resulted in 45 customers ordering from 6 continents, up from 33 in the prior year.
2 seconds left.
Wow, talk about going for the jugular.
Well, Brett had a lot to say. You were going at rapid speed there.
Yeah, he was chirping the Saskatchewan copper in that out
So they actually put out, Vecima actually put out a news release yesterday about its products being in 8 of the top 12 cable operator companies. What do you guys think of that? Any last minute comments on that? Anything?
I don't think I need to make my case any further.
So in other words, it's my case here. And that it's continuing them acquiring customers. They have great global coverage. If you look at, I wish I'll put it up on the screen afterwards, but we won't be able to see it. They essentially control all of North and South America, and then a bit of Europe, if I remember correctly, and a few spatterings around the rest of the world for these technologies.
Okay. So I honestly, you guys both made some interesting points here. Now, I was given a question. I was asked a question by a client on Vecima yesterday in regards to the press release. So I actually did get a chance, even before the debate, to take a look at the company's financials. Just so everybody knows, Vecima is a company that has been under coverage in our research in the past. At the time, it had good growth in earnings, a low valuation, and a net cash balance sheet. This was years ago. Now, as Brennan mentioned, it's now in a net debt position, not much of a net debt position, still a strong balance sheet, but we have seen the cash fall. And it's, although the balance sheet is still strong, it has become less strong over time. Now, Brett, I don't know if there has been a nice acceleration in earnings growth lately. So in the past couple of years, when I've looked, earnings have been low. The earnings growth has been negative at times. There's been a lack of profitability. But just in recent financial reports, the company has really started to grow their earnings again. It's actually fairly impressive growth in earnings per share in the last quarter. I think it was about 70% or so. Am I correct on that? Yeah?
Yeah, okay. Somewhere around there.
Yeah, but it's really impressive. The problem is that even with that level of revenue growth, earnings are still pretty low. And, Brennan made maybe one of the best 60 times earnings right now, right? And I liked the press release. It sounded great. 8 out of 12 operators in North America, cable operators, to be in that many major cable operators is a fantastic achievement for the company. But there was really no specific information provided financially on what that means. So one of the things that I was kind of struggling with when I'm looking at that is like a lot of this work that they've already done and it's already in the past financials, or is some of it new sales that is going to drive, greater amount of growth going forward? And the information just wasn't there. Is any of this going to be recurring, or are they one-off? So when I look at the company right now, I see a company that is improving, is exciting, but am I going to buy it right now? No, I'm not going to buy it right now, because the earnings per share, they're just not significant enough. They're still relatively low. 60 times earnings for what's, essentially a hardware company. Hardware generally trades at a lower valuation relative to software companies. That's expensive. It's not a net cash business anymore. I have seen this company exhibit some pretty significant volatility in financial performance. I'm not so much on the revenue line, but certainly on the profitability line. So while I think you both did a great job, it pains me to say I'm giving this one to Brennan. Brennan's the winner.
It pains you to say? It pains
you.
Yeah.
I think it was one on the coin toss there.
I agree.
And what I think that really should be pointed out is Brennan is turning his back on his own city. This company was founded in Saskatoon.
Really?
Yeah. And
because they're based out of Victoria now, are they not?
He took the bear case. Yeah, but founded in Saskatoon.
Yeah.
They're
actually their facility is very close to where I used to live. So
yes.
Yeah. Right outside.
Well, Brennan,
and
if you're cool with turning your back on your people, that's okay.
If it means getting the W.
To get the win, right?
Well, you're from Vancouver, right?
Saskatoon,
Ryan, you're from the Vancouver area?
If it suits me well in the upcoming argument, you're going to...
Okay, yeah, because there's a lot of junior mining companies that were founded here in Vancouver. You're not going to turn your back on
I beg to differ.
No revenue, no profit. Ryan,
I beg to differ that they're actual companies. I don't even include them in my analysis as a company. If you don't have a shred of revenue in your history, you're not really a business yet.
That's
you're just... Yes.
Which the internet will rip you apart for.
I hope so. I'd love to.
Yeah.
Do you not recall the the CEO from the TSX venture tried to call me out on ripping TSX listed mining exploration companies, and that was fun. We look back to see what the index has done since then. It's been once again impressive performance. Thank you.
If I could
I just look at the scoreboard is what I tell him.
Going back to Vecima, just to put it into perspective for listeners. So when we initially recommended it in June of 2014 and put a buy on the stock, the company had about 5% in revenue growth, had 70% in earnings growth, and was trading at about 14 times forward earnings. So just putting that into perspective and into contrast of,
and maybe earnings growth is going to continue to be strong and they're going to grow into this valuation. But I don't have the confidence that that's going to happen. Yeah. And, I'm not even 100% sure that earnings growth or maximizing margin or just, doing what you need to do to achieve a stronger margin is really what the main focus of the company is. A lot of times, these technology companies will say, well, we're investing in growth at the expense of profitability. Growth meaning in revenue growth and trying to acquire market share. Sometimes that works out. Sometimes it doesn't. We're looking at the cash flow. We're looking at the profitability. And I have to be honest, because I did look at the company yesterday. I'm very interested in seeing how the company does over the next couple of quarters and how earnings trend. But I wasn't opening up my brokerage account to make any purchases at that point in time.
I will add that's the exact same conclusion. Me and Brennan were actually talking about this yesterday. We were concluding on who was going to win, and I was saying just the valuation was straight up too high. If we were trading at a 10 PE, even a 20, it'd be more respectable. Yeah. But even if the technology is going to succeed, and it looks like it is to me, but if they can't get those margins up, it's going nowhere. I'm not going to pay for 0 cents on the dollar back.
Yeah. Yeah, exactly. And it's actually, like, you look on just a share return basis, like, it's done quite well this year in a down market for hardware, software, anything to do with technology. So, I mean, they've had good news. I mean, it's likely on the backs of strong earnings relative for the company, good 60% plus jump in revenues. It's excellent to see. There's certainly worse companies out there, but what price are we paying for the underlying value? And right now it does look to be quite high. So I think that's the conclusion we'd have. Again, this is nothing against the company. It's just us looking at it from a fundamental perspective. Even if they are to continue to grow at this rate, it would still likely be quite pricey right now. And our watch then will be like what everybody's been saying on the margin front. And Brennan, you didn't really have to make that point. You already won. Right, so you already won, but thanks for making the point there. I think you had that information just in your quiver, just expecting to lose, and you just wrote more, so you could say, "But this look." No, you provided a good historical context for where what multiple the company would have to be with what growth rate for us to actually consider it a buy, right? And it had been trading back at those levels. Stock's done well since then. I'm happy to see, but I think right now it's a little more on the pricey side.
Late to the party, if anything.
Yeah, at this point, right, for sure. Yeah.